Cash is one of the most liquid and easily transferable assets of a company, so internal controls is paramount to ensure that it isn't just flying out the door. One of the most effective methods of doing so is a bank reconciliation, the process which I'll be explaining today. Whether you realize it or not, you've probably applied the basic principles of the bank reconciliation in many aspects of your daily routine. For example, let's say that after work you go to a nice Italian restaurant, you order a pizza, pasta, and a bottle of wine. You expect the total to be $80, but when you get the bill, the total says $55. To clarify this discrepancy, you would probably follow a process similar to this. First, you would identify and correct any unrecorded items by either party. In this case, they forgot to record the pasta. The next step is to do the same thing for any errors. Here, they accidentally charged you extra for the lasagna. And finally, you check for any unexpected deductions or extra charges. This is more or less the same for the bank reconciliation process. The first step in a bank reconciliation is to reconcile the bank balance to the actual cash balance. This in effect refers to ensuring the bank statement matches the actual cash balance and doesn't have any unrecorded items. There are two types of adjustments we need to consider. The first is deposits in transit, which are added since they refer to the checks the company has claimed, although the money hasn't been transferred yet. Similarly, outstanding checks are deducted. These are the checks distributed by the company that just haven't been processed yet. The next step is to repeat this process for the business's records, or in other words, reconciling the business's book balance to the actual cash balance. In this case, we add unrecorded collection of receivables and deduct non-sufficient fund or NSF checks. NSF checks are checks that have bounced back and weren't paid to the company due to insufficient funds in the payer's account. Much like in the restaurant example, we also need to consider any errors in recording the numbers, any unexpected cash injections, or unexpected deductions. If these steps are completed correctly, the bank and business's records should be the same. So, the company now needs to write adjusting entries to reflect the changes to the records identified in the second step. You can pause the video now to see the required transactions. So, to recap, the bank reconciliation process is made up of 3 steps. First, you reconcile the bank statement to the actual cash balance. Then, you reconcile the business's book balance to the actual cash balance. And finally, you adjust the business's records to reflect the necessary changes.